Welcome to the deep dive video. This video is designed to go over charts that I don't cover when I prepare each day's video, just to give us some insight, maybe pick up a few things that we're not picking up otherwise. This is being prepared for Monday, March 20th. This first chart attempts to define a range for the VIX. From about 2008 through 2012 or 2013, we had a range of about 40 to 20 on the VIX. From about 2012 to 2013, up until the COVID plunge, we had a range of about 20 all the way down to 13 and sometimes even below that. Currently, we're in a range between about 27 or 28 on the upside and about 20 on the downside. And this is designed to be more dynamic, so it changes over a period of time, where usually we use the VIX with static numbers, 12 to the downside and 20 to the upside. Well, this adjusts as market conditions change. Also related to the VIX is the RSI 9. I did show this earlier in the week when we were going down in the market. The VIX was really going up and we hit an extreme positive reading. But since then, we've been falling back with the RSI 9. This chart just shows where are we at in relation to the all-time high. We're down 18.72%. And over on the right-hand side with the red line, that's where we closed in Friday's session. The technical alerts, these are released every day. This is just Friday's alerts. When they're in blue, that's positive. When they're in red, that's negative. One area that we've seen some strength in lately is the NASDAQ, and it had a bullish MACD crossover right at the open on Friday, where all of the other signals were negative. Discretionary had a BPI cross below 30. The NASDAQ then ended up going below 11.7, 11.6. The Dow went below 32,000. Oil also set a 52-week low. And you can have access to these alerts by going to stockcharts.com. They're freely available to you. Another thing that's kind of interesting is the 5 indexes that we follow, the Dow, the S&P, the NASDAQ 100, small caps and mid caps. Which one is doing the best? Well, right now, what's really going in the lead is the QQQs, which is attached to the NASDAQ 100 with a score of 94.9. In second place, a distant second place, is 55.1 with the S&P 500. In third place is the Dow at 50.5. In fourth place is the mid-cap ETF at 24.6. And in last place is the small-cap ETF with a score of 20. Small caps and mid-caps had been in the lead for a lot of 2023. Well, now, with this past week, they really got hammered big time. So some of the other indexes are coming in to take over leadership. On a short-term basis, we have the moving average rainbow going from a moving average of 10 all the way up to 50, where we're just chopping around in the rainbow. When we're going up and down, above and below the rainbow, this chart isn't as helpful. In the intermediate term, we have the standard deviation. We're just about on the moving average, so price is not really above or below the standard or average price. The mass index is not generating a signal right now. The Pring Bottom Fisher is also not generating a signal. The Connors RSI works just like a regular RSI. We look for extreme positive or negative. We're below the dashed line and declining, so that is negative. The intermediate term rainbow goes from 50 periods all the way up to 100 periods. Also pretty choppy right now and not really that helpful. The vortex shows that the red line is on top and advancing. That's negative. The green line is also advancing, but it's below the red line, so this is negative overall. The ease of movement goes back just one period. I look at the one on the bottom, going back 14 periods, showing that we're below zero and declining slightly, so that is negative. The money flow index is below 50 and declining, negative. The Sean trend meter is also declining. The boom indicator is below zero with the 50-period moving average as well as the 200-period moving average. So this chart is negative. The RSI 14 and 9 are below 50 and declining. That is negative. The CMB Composite Index, not a real helpful tool as far as a trading system, which is what it was designed to do. I use this to watch the black line when we get to extreme positive or negative, and we're currently right in the midpoint. The Ultimate Oscillator is below 50 and declining. That's negative. The PMO continues to decline, both based on price and volume, trying to turn up a little bit but hasn't crossed positive yet. Another chart that I haven't shown in a while is the 50-period simple and exponential moving average. If we're below 50, that's negative. If we're above 50, that's positive. Well, we are currently below the 50-period moving averages, so that is negative. Then this is a 20-period moving average of the open, high, low, and close. Sometimes when we're going down, we can come back up, and one of these lines may act as resistance. And then this is 1, 2, and 3 standard deviations above and below 0. After getting down to a -3 standard deviation, we came back up right about to the midpoint before starting to go back down. Our moving average study, we're declining with the 20, 50, and 200 period moving averages and not giving an extreme reading. The CCI 14 is below 0. And the CCI 20 is also below 0 and not giving us an extreme reading. These are pretty touchy indicators. When we really get moving, they can be extreme positive or negative pretty easily. The Ichimoku cloud, we broke down below what had been support. If we try to go back up, this green cloud may act as resistance. The percent B indicators connected to the Bollinger Bands. If we go below the lower band or above the upper band, that can give us an extreme reading. We're not seeing one of those right now, although we are below the dashed line and declining, so that is negative. Looking at some different charts, the Heikin Ashi still positive with open candles. Nothing new on the point and figure chart. We had a bull trap that was registered on February 21st. A few circles and X's get drawn in from time to time, but nothing really new as of late. The Renko chart is still negative with 3 red boxes. The 3-line break is also negative with black bars. And then some long-term charts. We have the 50 through 250 period simple moving averages making up our rainbow here. Again, not really helpful at the current time. The Special K, a very long-term oscillator, is below the moving average and declining, so that is negative. Our long-term moving average study, we're declining with the 150 and 200 simple moving averages. That is negative. A broad market measurement is the VIX on the NASDAQ 100. Can't really use the upper bar chart now because of all this erroneous data, but down below we're kind of keeping an eye on this. This has not been going up the way the VIX has been going up because the NASDAQ 100 has been doing a lot better and actually breaking out to the upside. A couple of rate of change charts. We have the 250 after hitting a double bottom back in October, and then in December we have been bouncing up, but now we're starting to come back down. Here's a much longer look at that same chart going all the way back to 1980. We do have support down at this -20 level, and we are showing a little bit of weakness. Some of our possible positive scenarios, but they're negative, so that's why I'm not really including them in the videos. The 10-day average of the S&P 500 highs minus the lows continue to decline. We're waiting to see if we continue to drop, will we get down to an extreme negative reading? And then a very long-term moving average of 253 periods on the equity put-call ratio. As this is going up, that usually means the market is going down because there's a lot of fear in the market. Another chart is the VIX to the S&P 500 correlation. It's not really telling us anything useful at the current time. So thank you. I hope you found this helpful. Please feel free to check out the daily video, the weekly video, the intermarket analysis video. I will be preparing the supplemental video before the market opens on Monday. So I will talk to you in the next video.